nobody knows what makes a company successful. Like every success story is unique on how they build it and how it scaled up and how it worked. But the failures are actually very repeatable and we know them. So like I built a list of 75 startup anti-patterns, which are all things that at least at first glance look like great ideas. I should do this. And then eventually, if you pursue them, they actually kill you.
This episode is for ex founders who wants to transition into VC. You've invested in over 158 companies, six of them being unicorns, took a company to IPO, founded two VC funds, the current one being Recursive Ventures, and you're someone who genuinely loves to help people. Itamar, welcome to the podcast.
Thank you so much for having me. I'm so excited to be here. I've heard great things about you and the audience. I think is a great audience for me to talk with, folks that want to break into venture capital. So I'm so excited to be here today.
Yeah, let's get back to the start of your journey. What was your first real exposure to venture capital? Was it when you founded a VC firm during your MBA or something else?
So I started my career actually as an entrepreneur, and I always tell this crazy story because my entire 25-year career has been in startups, and I first started as a founder, and I was running this company straight up the Israeli Defense Forces. It was 2001, so it was still the tail end of the bubble days, and I thought I could just start a company and be a freaking billionaire. And obviously, I had a lot more to learn before I got there. So I started a company with a friend. It was called Intech Technologies, and we were actually scaling up. We sold software to the Israeli government back then, and we tried to raise money from a few VCs, but they're like, "Ah, this is not interesting." So I didn't really know a lot about VCs. Then we got to a point where I had 7 employees working for me, basically building software, and you know just wake up one morning and I get a call from my single customer, the Israeli government, and they're like, "Look, nobody's actually using your software. Can we cancel this thing?" I was like, "Oh my God." Had to shut down the company, let all my employees go, and then figure that I don't know much about building a company. But later on, what was interesting is that the few venture funds and angel investors that we talked with are like, that's not going to be a scalable business. I didn't understand what they even are talking about. Obviously, now I do. But that was the first time I got exposed to venture capital is when, I failed miserably as a founder in my first go at it.
Yeah, and the craziest part is that you were in Israel and you literally just was like, "Hey, let's start a company. I don't have much experience, but I'm gonna do it and I'm gonna help people. I'm gonna make sure that, the government is protecting its people with its data and everything like that." And you really just like did something that, 50% of the people would just like never even start. And that's a crazy thing. Like you're in such an environment where you're like, okay, I'm gonna help people. I might not know much, but I'm gonna do this. Talk about your VC journey. What really led up to you founding VC funds and really going into that startup space?
I'm more of an entrepreneur than a VC, even though obviously I have a full-time job running my own venture firm these days. But I I've been at startups for close to a decade before I actually moved over to the VC side. And it's always been a dream of mine to try at least to be a VC. So I was very fortunate when I came over to the Bay Area as a student at the Berkeley Haas School of Business getting my MBA. I was in a very interesting position. This is back in 2010, where I was coming from this company called Gigia, that used to be a Silicon Valley darling, first round benchmark and Mayfield backed, and I was employee number 2 or 3 in the company, like one of the first employees. And I was head of product. It was Gigia back then was a sort of developer API for social media integrations, which was a very hot space in 2010. So when I came over to the Bay Area and started talking with various VCs, Morgan Terra Ventures, which is now called Canvas, sort of a storied Sandhill Series A, Series B firm, kind of noticed me and they said, "Hey, we actually have a social media thesis. Would love you to be involved." And that's how I started working with them and ended up spending almost 2 years being a senior associate um, at again, a Sandhill based venture firm. So that was the first time I was really exposed into venture. And it actually led me to a lot of interesting insights. The first one is obviously this is what I want to do when I grow up. The second one is this is not for everybody. And there's a lot of reasons why you shouldn't do it. And I'm a firm believer that you should have a strong operational track record before you do it. Right. So that's the second one. And the third one is that venture is going to be completely different in the future. And I don't want to do the things that I learned in Morienter because I don't think they're going to work in the future. Right. So this new dawn in venture that I feel I'm part of today.
Yeah, and you talked a bit about how VC is not for everyone, and you are personally a firm believer of having that founder background first, because it's really, you're coming from a place where you're helping founders, so you really have to be there. You have to be doing that. And what you've done is that, you were at companies, you've worked at companies as product, sales, marketing, everything, and you even took like a company called Life 360 to IPO. So you really went through like every single stage possible for a company, and the connections that you have as a founder, you just know like incredible people who are great founders, and you're like, I want to help them. And if I really do want to help them, like what should I do after, Life 360? And what you really did was, Recursive Ventures. So could you talk a bit about your journey to raising funds and how you manage your thesis for Recursive Ventures?
Yeah. So Recursive Ventures has actually been around for a while. I just wasn't working full time on it. I did it while I was at Life 360. It was interestingly enough, I'm not an original founder of Life 360, but when I was a VC, I ran into Life 360 at the earliest pre-seed, seed investment stages. I did all the diligence. The firm passed, but I ended up leaving venture capital to go all into the company and then put all my money into buying a co-founder that wanted to leave. And then I spent 13 years taking Life 360 from seed stage all the way to IPO and beyond. So, um, and also a lot of my philosophies around when and how you should tackle venture are kind of embedded in that story. But to go back to your question, I actually started Recursive Ventures in 2014 as a side moonlighting gig. I was writing $25,000 and $50,000 checks while I was running Life 360. And I did what's called Recursive Ventures 1. Then in 2018, I did Recursive Ventures 2, which are again, two funds that I did on the sidelines that overall managed around $10 million. So a very small fund, right? But again, I was doing it like on nights and weekends. Um, and those two funds were very successful. I was able to pin down multiple unicorns, drive DPI, get money back to my investors, which included mostly venture funds and family offices, but really small checks. Um, so, so Recursive has been in the making for the last 11 years, and really only previous quarter in Q1 of 2025, I announced that I launched a $30 million dedicated fund, Recursive Ventures 3, that I'm working on full time. So it's been a while in the making. And I think that's also what set me up for success in the sense that I already had a very strong track record, both as a successful entrepreneur that took a company public and as a strong investor that has been institutionally trained on Sandhill Road, later to turn into a pre-seed seed investor and showing a track record there. And that's kind of the credentials that I typically like to advise younger folks who are trying to get into building their own venture firm to have in order to be successful in the business. I'll just add one more thing, which was sort of an interesting advice I got from my bosses at Morienter Ventures back in the day. And they're like, look, even if you give you a checkbook to write $50 million in checks, you're going to lose money because you're not going to be able to compete with us. Like, have you built a significant company? Have you took it public? Have you like? And I think their advice resonates even more true these days when there's thousands of firms and it's really hard to make money in this business. So you have to have such a strong competitive advantage to be able to really, you know, make money out of this and, bring back money to your LPs that I really encourage folks these days to think long and hard before starting a venture fund.
Yeah, and the great thing that you do is you really focus on pre-seed, and what that is it's going from 0 to 1 for founders. So if you wanted to, obviously you could raise like more rounds from LPs just to get more money to do like C rounds, to do like series A, B, C. But you really do want to help start that 0 to 1 process with founders. And you've invested in, a great company called Deal. So
Mhm.
as a general partner looking at deals every day and someone who've invested in 6 unicorns, what are the top 3 things you look for in a startup when considering whether or not to invest?
Yeah. So just at a very high level, the top three things that I focus on are team. And obviously we look for several things within the team, like what DNA, what's the composure? Do they have like significant track record in the space? Are they fundable and so on and so forth? So that's the first category is team. The second category is TAM. How big is this market? Does this like really qualify as a venture backed business so it can, eventually reach a multi-billion dollar valuation? That's the second category, TAM. And the third one is moat or differentiation. So a lot of our deals are based on, and especially because I'm very focused on AI these days, a thesis around AI moat, which is really how does this business stay ahead, at least 1 or 2 years ahead of all the competition, whether it's incumbents or whether it's new entrants, to the point that it can grab enough market share to have significant exit velocity. So those are the three main dimensions that I put a lot of emphasis on when I'm diligencing potential investment opportunities.
Yeah, and literally right now, like the evolution of the AI world is just going faster and faster. So startups are ramping up like crazy. They could go from like 0 to like 100 million ARR in like a year. For example, Cursor. It's insane. So, the VC model is obviously going to change, but what is going to stay for the aspiring VCs looking to break into venture capital?
I think so. I have a pretty critical and almost cynical point of view on this transformation that's happening in venture capital. So I would say folks like me who write the first check that help employees of like OpenAI, Google DeepMind, Anthropic, other places leave their cushy jobs to start a business. I think that's and like hire their first engineer or like two engineers. I think those checks are here to stay, right? Pre-seed and sort of early stage, super early stage funding is kind of critical to empower entrepreneurship and help people make a leap of faith to build their company. Um, I also think there's going to be quite a few businesses that would eventually get to a point where it's very clear that there's significant ROI in investing in them scaling up growth stage pre-IPO, right? So I think the big platforms like Andreessen Horowitz and General Catalyst and Sequoia that sort of have billions and billions of dollars under management and can really, put $100 million into play into a company that they believe in, take it public after 3 to 5 years, like that, and sort of do it across the up and down the stages. I think those kind of those firms make sense. What I'm a little bit more hesitant about saying is a good idea is all the folks in the middle, right? Like the 100 to $200 million funds who are generalists who invest across both pre-seed and Series A. Uh, I think that's very hard, which is why if you look at my strategy at Recursive Ventures, it's really simple. I do only one thing, which is running the best pre-seed AI fund in Silicon Valley. That's it. That's all I do. I'm one of the best already. I want to be the best. I hope I'll be number one even this year, right? Um, and I'm just going to do that. Focus, 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 which is the exact same advice that I give, my founders when they're starting companies, like focus, right? Um, and I think that's the way to win in venture capital these days is you have to have a focus on stage. You have to have a focus on vertical. You got to be the best at what you do in that stage and in that vertical. And that's going to help you fend off all the competition, whether they're big or small, because you're just going to be the go-to person for why, right? And that's really what I'm trying to do and what I would advise others to do if they are setting a venture. That's very different than a career in venture capital. So I'd almost talk about those two things under two different, like maybe different questions of like one, breaking into venture as a junior or a senior guy in an established firm versus two, what I'm doing, which is really like fund entrepreneurship, right?
Yeah, and the really, really big VCs, they're definitely here to stay because they're kind of too big to fail, and also they're kind of the best in the industry. But for the VCs in the middle, you really, really have to be the best at what you do. You have to find niches, and you have to make sure that your values, your morals, it's really got to reach the founders where they're going to be referring founders to you, where you're going to be getting tons of good inbound warm leads, because that's what the really biggest firms are doing. Because Sequoia, for example, they're really just like getting their deals from their founders and the founders that they know. So it's really just like A players referring A players to themselves. As a VC, what qualities should you have if you are considering this career?
For me, it's very different careers between starting a fund or joining a fund, especially as a junior guy. Um, I would say to be a successful VC, you probably want to have a mix of a couple of skill sets. The first one is you got to have an investor's mindset. So that's a little bit different than operator mindsets or entrepreneur mindset. Where entrepreneurs, operators, they want to build, they want to go, they want to move fast. VCs, investors in general, you're making an investment decision, which is kind of a more balanced process where you want to really understand the pros and cons. You want to be objective. You're not trying to operationalize something. You're trying to make an argument. You're trying to build a thesis on why, to allocate capital into a deal. So it's a different mindset. That's one thing. The second thing is you probably want to have a lot of intellectual curiosity and at the same time also intellectual honesty of you got to want to learn new things. You want to meet new people that will teach you stuff, um, and you also have to be honest about your limitations and how much you know and how much you can really diligence versus what you gotta get help on. Right? It's like, okay, I need an expert to help me understand this AI infrastructure thing because I'm not an expert in AI infrastructure, which by the way I'm not. Um, so kind of have intellectual curiosity and honesty around what your limitations are and how you can do the best job for your LPs in terms of making sure that you're investing in the right things, right? So that's the second thing. The third thing that I would say is, and I think that's true for a lot of financial services, businesses, is you got to be able to sell. You got to be able to sell to be a VC. It doesn't matter if you're selling because you're pitching a deal to your partners in a partners morning meeting, Monday morning meeting. You got to be able to sell. You got to be able to sell to LPs, right? Your story, your thesis, your narrative, right? And having them back you. I think even if you're a junior guy, eventually, if you want to become senior, you got to be able to source capital into the firm, right? And if you're doing what I'm doing, which is solo entrepreneur VC, you do all the sales, right? Um, so I think you got to be able to sell. And the fourth thing, which we kind of touched on, and I don't want to expand on this, maybe in a different question, is I think you have to really understand your customer well, and your customer is the founder. And I think if you haven't walked in their shoes, I think it's going to be very, very hard for you to be a successful VC. Maybe as a junior person, you could be fine for a bit, but if you are making investment decisions into companies, sitting on their boards, being the founder's wingman on this journey, and you haven't done any of this, it's really hard, and you'd lose a lot of credibility for obvious reasons. And like, why would the founders trust your advice if you haven't been in their shoes? I think that's a critical piece that a lot of younger aspiring VC professionals skip on. It's like, man, I'm not sure you should be a VC if you haven't built a company before.
Yeah, and the thing is that most of the times, VC is like an exit for founders. It's an exit for someone who had a long career doing something very special that they are the best at. So, like Itamar says, you gotta make sure that if you are a VC professional, you want to be able to connect the dots. You want to debate yourself in the way that you're like, hey, is this company actually gonna reach IPO? Is this company actually gonna be 10x the investment? And you also have to make sure that you are a learner, a serial learner, because the industry, especially AI, it's evolving just so quickly, and it's at the rate where no one actually knows what's going to happen in, the next 20 years. Maybe we would have an entire different society, and that's the craziest thing. So if we are the VC who really pushes that, like Itamar does, it would be insane. Like, you would be changing society forever. So first things first, you can't skip being a founder for at least most VCs, especially if you want to become like a junior into principal, a junior into partner. You need that step because you need to learn how to raise capital. VC is a sales job in a way. So you need to learn how to raise capital from LPs. You got to make sure that you have founders who takes your deal instead of a bunch of VC funds. Because
Right.
now VC funds, there's like tons and tons. So why would they choose you? Like, that's, you have to have an edge. And for Itamar, his edge is that like he's literally been through like every single stage of a company. He took it to IPO. He's been like a VC for like 14 years, giving a bunch of checks. I think definitely more than 158. So he's done it all. And that's why, obviously like he could be retiring right now and just like doing nothing. But he's like, hey, I kind of just want to make it pre-seed. I just want to help some founders. And if I change society for good, I'm happy. Like, this is what I want to do in my life. So, as someone on the investment side of things, what does your typical day look like?
Yeah, that's a great question. So, mostly meeting with founders, which is what I love and enjoy. Again, you nailed it. I'm here to help founders and help them get from 0 to 1. And for me, I'd probably take 5 to 7 calls a day with founders, which is actually a lot when you do it every day. Um, that would be, you know, mostly new founders that I haven't met. First call, screening call, maybe second call to dive a little bit deeper into it. Um, then I should also mention that I have one superpower, which is, I think, why a lot of founders work with me. And that is I'm extremely good at helping them get to the subsequent funding round, which is seed, series A, right? Helping them so called graduate. I've helped over 50 of my companies graduate to series A and beyond. And collectively, we've raised billions. I've raised over $400 million myself at Life360. So I have a lot of experience with, hey, what does it take to get you to the next level, kind of scale up funding and the business? So the rest of my day, probably another 1 to 2 calls, a lot of emails also, is really focused on the 3 to 5 companies in my portfolio that are fundraising and helping them with that process, right? Like, how do we close that Series A lead? Which Series A, potential investors are the right ones for us? Making intros, doing back channels, helping, polish decks, like really helping my founders hit out of the park in their next fundraising round. Um, and then, so that's kind of like the majority of my day. Then the remainder of the day is engaging with LPs, which, because now I have a fund set up, I've already closed the last fund. I don't do much of that in the next like year or two. But, eventually for us GPs, we have to go and raise capital, very similar to how companies go and raise capital. So it does take time and effort to get all that money funded into the fund so we can invest in you guys.
Yeah, like Itamar says, one of his superpowers is that he can help the company, whether pre-seed or seed, to scale really beyond the secondary markets, where it's like, hey, if you want to raise that Series A, like, I actually got you. I'm not just gonna say like I can help you, but I actually can help you because I've done like 50 of these companies before. I've raised like 400 million myself. I've taken the company to IPO. So that's your edge. Like, that's one of your biggest edge to being a GP of your fund, and why founders, especially pre-seed founders, would want to have your investment, to have your check. So could you talk about, because I know that you don't take board seats and you kind of just like let founders kind of do their thing. Could you talk about why you do that, and um, why VCs don't usually?
Yeah. Well, first of all, I don't think I'm necessarily the smartest person. Founders operating in their markets, target markets, are much smarter than I am about what's working and what's not working in that market. So I'm not in the business of telling founders what to do. I think that's a wrong take on venture capital. I'm in the business of investing in people that don't need my help to figure out how to build their startup. They might need my help to figure out how to do funding or how to do an M&A deal or how to go public. That I have way more expertise than them. But if I'm smarter about the founder space that they're operating in than the founder is, I shouldn't have invested in the first place. And if I'm investing, it's because I believe those people are going to be able to figure it out and crack it. So I'm kind of, for me, it rubs me in a very, very bad way when I am somehow in present in board meetings as an observer or something. I don't think board seats, you rightfully said so. And then a VC steps in, like, I'll show you how to build this business. I think that's completely wrong. It's a complete misunderstanding of the VC's role in value creation in those companies. At the end of the day, VCs are here to provide you with capital. We're not running the business, right? So, and we shouldn't. So that's why philosophically and also from a focus standpoint, I don't take board seats. I don't tell my founders what to do. I'm just there to support them when they need me. And funny enough, what ends up happening is that I mostly support founders on fundraising related things. And also we're dealing with their VCs who think they actually know how to run their business better than them, even though they don't. So it's funny. I'm kind of like the anti-VC VC who believes in getting the VCs out of the way, supporting the founders to, you know, do a scale this thing out of the park and minimizing noise and interruptions as they do that. That's typically my role. I, in that sense, I'm more like a super angel that writes very big checks than a big institutional VC that's going to try to control you and tell you what to do until you're bored. I don't really believe in that.
Yeah, and what usually happens is that you will actually get the best of founders because, the best of founders, they know that they're having, a great product. They know that they have a great vision. So all they really need from you as a VC is just your support in what they want, not what you think they want. So what Itamar is here for, for founders is that, especially in the most critical parts, scaling where founders are really, really just like don't know what happens because scaling it's like a whole different process. Every stage of the company is different. So that's where he has like the main expertise to really just help founders and help them in a way where value creation is actually value creation and not just like butting heads with, hey, you should do this. Oh no, you should do that. And then everyone would just have a bad relationship. And that's what we don't want. So,
Yeah.
how do you seek out the best founders? Do they just come to you?
Yeah, well, the honest truth is I have a lot of deals kind of inbound coming to me, and part of it is because I've done over 170 investments actually in Silicon Valley over the last 15 years. So, I know a lot of entrepreneurs who are building their next thing. Maybe their star employees building their next thing, and I should know about it. And I've built a reputation of like being the first institutional person that a lot of those people would approach because I'm helpful, because I'll help them get the round done, because I'll help them get the next round done, because I'd give them friendly feedback versus play all sorts of VC games that VCs play with companies. I don't do any of that. So that's the first thing. The second thing is I'm originally Israeli, although I've been living in the Bay Area for 15 years. And within the Israeli founder community, which has created, 80 unicorns over the last decade in the Bay Area. So this is Israelis in the US, not back in Israel. I guess I kind of am closer to that community, so I see a lot of deals there. Around a third of my overall portfolio is what's called Israeli related, which is mostly Israelis here. So that's a nice chunk of my business. Um, and then also I have a few venture partners that help me out. They're amazing, and they have their own massive networks of founders. They're both of them are serial entrepreneurs. They're both amazing angels that I work with, and that obviously kind of expands our network in a significant way. So between that and all those different moving parts, I get 3 qualified deals daily, which doesn't sound a lot, but it is a lot because a qualified deal is coming from somebody I know and trust, and it's either them or somebody that they know and trust who is starting a company. It's pre-seed and it's data and AI focused. So like super focused. This is not a random. I don't do cold calls. I only like a qualified deal for me is only through intros, right? Of people that I know and trust. So getting three of these a day is actually a lot, um, because I can't talk to all those companies even if I wanted, just from the warm intros ones. That's the honest truth.
Yeah, so right now, since you built up such a great track record and everything, everyone in the founder community, they're just like, Itamar, he's such a great guy. Like, if I'm a player, founder, and I'm thinking like, hey, who would I recommend to Itamar? It would be also another A player founder. So right now you've got like such a great team. You've got, Evan as your CFO, and you've got a bunch of venture advisors just helping you from the side. Could you talk a bit about the different roles in a VC fund and more generally, like your size of a VC fund and how, aspiring VCs could kind of break into that?
Yeah. So unfortunately, I'm a solo capitalist, which means that I'm the only person on my investment committee, and my immediate plans is to keep it that way. So it's a little bit like the Alad Gil or the Orenz playbook of being solo, but it doesn't mean it still takes a village to do what I do, right? So my venture partners, both of them are actually serial entrepreneurs who've been angel investing for a while. They're not general partners. They don't want to be VCs. They just want to help founders, and they're very good at it at the get go, which is why it's perfect for what I do. Because again, I'm typically the first institutional investor in the company. Um, so at the pre-seed stage. Um, and then I have a bunch of venture advisors. They're subject matter experts. They're either, in the deal flow, helping source deals, or they're experts about go to market, or they're experts in specific verticals like financial services or e-commerce, right? They understand that world very well. So we can make smarter investment decisions when we see companies in those areas. And one thing that I do is, even though I'm solo, I never ever do a deal by myself without having at least one advisor involved, because it's always great to have somebody that bounce off ideas and kind of point out where you might be missing some stuff or where we need to do more diligence work. Um, so I would say for aspiring VCs, I'm probably not going to be the person that's going to hire you because I don't hire associates or partners. But you know, in general, I think to get hired by a VC firm, it's really important that you're in the deal flow, so you get good deals to show up with. You can show GPs how you can source those deals, and they're relevant, high quality deals. So that's the first one. The second thing is you probably need subject matter expertise, which is, oh, I'm like really smart about, services of software in AI. That's interesting because if the investment firm happens to have a thesis in that space and you happen to be a subject matter expert, then obviously you've got a leg up. Um, and then the third thing, which I've already alluded to, is again to break into venture, which is I know the name of this podcast. Um, Breaking into venture capital, I'd say at least on the West Coast, like Silicon Valley, it is extremely important for you to have a strong entrepreneurial background. And through that entrepreneurial background, you get exposed to all those venture firms. And I can show you countless examples of people that ran companies and met with VCs they loved connecting with on their board, and ended up taking a position with that VC after the company exited. Right. So that's kind of another important aspect of it. If you want to break into venture capital, Uh, look, if I was a junior guy that wanted to go into venture capital, I would probably be on the lookout for some of the bigger firms because, like in venture, it's easier to move up the ranks by moving down the tiers. Like if you worked at Sequoia and you want to get a GP job at a second tier firm, that would be really easy. What's hard is to be at the third tier firm and then try to move up to a first tier firm. You're probably going to get ignored. So, like, if you are breaking into venture, go for a big, reputable firm, no matter what the role is, learn the ropes, and then try to move up. With all that said, I'm not a big believer in associates moving up to being general partners. I don't think that's the way the world should work. There's always exceptions, and I truly do see, like for junior investment professionals, people jumping into an analyst or an associate job. I would more be thinking about how do I find the best portfolio company to jump into as a VP versus like how do I move up to be a general partner? Because if you're an analyst today, there shouldn't be a path for you to become a general partner. You just shouldn't. It's not like this. You don't need the same skill sets. It's like different skill sets to be an analyst versus being a GP. I don't think you're ready without again running a company. That's just my philosophy.
Yeah, and really, I've seen like a bunch of junior analysts, associates. Really, their VC career is like once they start at a large fund or a VC fund, they go for like 2 years, 3 years, and then once they see that golden, company, when they see that company that could go into a unicorn and IPO, they really just jump right into it. So it's really like, when you're a junior, you're just like doing tasks that your partner kind of wants you to do. You're looking at startups with the investor eye, so then you can build an eye for that perfect or not perfect, but that one company that will possibly reach the IPO. And the crazy thing is that um, as a junior analyst in VC or an associate, you're really just gonna stay there. Well, most people stay there for like 2, 3 years, and then they go into a portfolio company. So for aspiring VCs that are kind of looking at this, why not just become a founder first? Because you're kind of just gonna go to a startup company anyways. So what Inmar is saying is that you need operational experience, like you need founder experience if you really want to become like a principal and a general partner. It just doesn't like work that way. So you want to really just like start right now. Like if you're a college student, if you're a uni student, if you're just someone really young, even in high school, just like start a company kind of part time. This is the best age to do it. Like AI is insane nowadays. And I think anyone, like no matter who you are, as long as you have access to the internet, you can do great things. What trends in venture capital are you most excited about right now?
I run a firm that's mostly focused on data and AI companies, and I focus on um, so the last mile of delivery with AI, what's called the application layer. I think that's where most of the value creation is going to happen. I'm not against investing in OpenAI, LLMs, AI infrastructure, and so on and so forth. I think there's going to be money made there, but the majority of the money is going to be with the applications built on top of it, and some of the LLMs and AI stack infrastructure is already pretty played out. So it doesn't really provide the kind of returns that you want to see at an early stage venture fund. So obviously application AI. I these days I kind of focus on three main areas. I think those are my focal points, my focus points for 2025. The first one is obviously agentic vertical AI solutions and workflows. That's a lot of people do that. I'm not special in that sense. I'm not necessarily a believer that 2025 is going to be the year of the agents, but I think it's going to be the year that we're going to start planting those seeds of agentic workflows, augmenting humans in a significant way, and in some areas replacing humans, and freeing them up to do other more valuable stuff. So agentic AI. The second sort of area that I focus in a lot on these days is what's called services as software. So that is a relatively new trend. It's a very interesting business model concept where we're trying to figure out, and I don't think we have it figured out yet. This is a bet. We're trying to figure out if leveraging AI internally, we can take a 10, 15, 20% operating margin consulting, right? Services business and turn it into an 80% services business, similarly to what we see in the terminal marginal profile of software companies. And I think it's TBD, but it's very promising because there's obviously trillions of dollars to be had in services that we've had consultants running around delivering those, and now we can do a lot of that with AI. So that's the second area. And then there's the third area. I just launched this program where I write 10 no hassle checks, 100K no hassle checks into consumer AI companies. And I'm really excited about consumer AI. My fund and like most of my track record is not actually in consumer, other than Life 360, incredible. But I think I think I think consumer like is going to be rewritten in the age of AI because like AI so fundamentally changes the human machine sort of interaction, sort of interface, um, that there are going to be opportunities to untopple some of the consumer giants that have been built over the years in areas like search and travel and personal finance and e-commerce, and travel. I mean, there's just so many things there that could be completely rewritten with how humans leverage machines to get this stuff done for them at a personal level. So I'm very excited about consumer AI as well, and I'm going to be spending a nice chunk of time into that in 2025.
Yeah, and I really love this initiative that you have for consumer AI because obviously, like everyone buys things, and VCs, they at first, in the couple of last years, they don't really like to invest in consumer AIs because it doesn't scale very fast and it's not B2B, which they love. But yeah, agentic services and also consumer. That is three big categories that have huge, huge potential. And with AI, like right now, it might be kind of uncertain, but once it really gets there, and it's going to get there fast. And that's why, Itamar is really investing in these pre-seed companies because he's like planting the seed for these ideas to form where it's like some, brilliant founders in consumer, they kind of just want to make the company, but VCs are not going to fund them because it's a consumer business. Like, for example, Sequoia, if they go and see like a consumer business, they're just going to be like, no, like we're cutting that out. So it's really great that you have this initiative to help founders. I'm curious, bonding with founders is one of the greatest things possible for VCs to invest in the best of founders. Talk about how you brand yourself in a way where founders are gaining value and also, really just bonding with each other, getting ideas, forming that great community.
I really focus on content. And I think that the future of this is actually an interesting maybe segue to talk about what the future of venture capital looks like. I believe that that venture capital is moving away from the firm model, like partnerships, to individuals. I think, Gen Zs and millennials, they don't care about big names. They want a person that they can relate to, that they trust, that they understand, that they've been able to consume their content and say, wow, I like how this guy thinks. I like how this woman, structures her line of thinking when it comes to building my business, right? So I believe the future is influencer VCs. I am hoping to become one of those folks. So you probably see me on LinkedIn, on Twitter, posting daily, um, and trying to help, you know, share ideas about what works and what doesn't work when building a company. One of the projects that I've been working on for a while, and I'm hoping to take to the next level, is what's called startup anti-patterns, which is really about like nobody knows what makes a company successful. Like every success story is unique on how they build it and how it scaled up and how it worked. But the failures are actually very repeatable and we know them. So like I built a list of 75 startup anti-patterns, which are all things that at least at first glance look like great ideas. I should do this. And then eventually, if you pursue them, they actually kill your company. Right. Um, and and I'm trying to share as much of that knowledge with founders. So sort of if you think about it as community creation, although it's more content, it's really about like helping educate, helping, bring up the next um, sort of generation of founders and giving them all those insights and know-hows that we've learned the hard way over the years so that they're more successful when they're building a company. I think that's what I stand for. Like being the non-VC VC, supporting founders more as an entrepreneur and angel investor, even though I'm writing VC checks, and then helping them avoid all the pitfalls and all the different mistakes that they can make in fundraising, in building their company, in scaling their businesses.
I really love how you really tell people about the good and the bad of VCs, and you're being way too humble. Like your LinkedIn branding is amazing. Like everyone, once they see that, like I'm just looking at it because I've been following you for like a while, and I've just I've looked at your posts, and every single time I just like learn something new. So do you just like sit down like for 2 hours and then say, I'm not gonna get off my seat until I write this post? Or how do you come up with such great ideas? What's a process?
Uh, Honestly, it's a lot of work. I probably spend on average 2 hours a day just generating content. And anti patterns is all about learnings that I've had over the years running companies, and that others like Sam Simonovic, who's helped me kind of we came with this concept, right? People that really help like think through all those different things. Um, when I give tips around fundraising, which is something that I do very often, on, to help founders, it's really from my experiences having backed over 170 companies and then seeing them raise more and more rounds afterwards, and kind of all the mistakes that could happen. Um, you know, Same with being a VC. I know how VCs kind of screw over entrepreneurs, so I'm opening up that one right in front of everybody, so that we can have a conversation about what is fair and what might not be fair when you're doing a venture round, right? Um, and then, being a practitioner of AI, obviously I run into stuff all the time in the AI world, and it's new and exciting. So I try to write about all that as well. But there's no shortcuts. I spend a lot of time generating content. Obviously, tools like Anthropic, Claude have helped me streamline that. Like, I don't think they're great at coming up with the ideas. Like, I come up with all the ideas, but yes, it does help me write more, faster, better, which is great. With that said, if you look at my LinkedIn posts, those are definitely not ChatGPT like posts. They're like they're hand curated and edited. Um, but that's really it. I mean, I feel like generating all this content is here to help founders, and if if I can accomplish that, then for me it's huge. Like, that's really what I want to see, being able to accomplish, like, helping the next generation of founders really build great companies, great scalable companies.
The great thing is that you're always trying to directly, indirectly help founders. So you're doing both processes at once. And even right now, you're hopping onto this podcast just to help like aspiring VC professionals. And these guys, they're really into entrepreneurship. So our audience could be founders as well. And so you're really just like indirectly helping so much people. And that's why you're such an amazing, genuine person who just wants to help people. For aspiring VCs, what would be your 6-month plan to break into VC?
I would first do an assessment of whether it makes sense for me or not, and whether I'm positioned well enough to do it, right? I don't think it's for everybody. I don't think it should be for everybody. And I actually don't think it's such a great job. It's like a lot of people who come into the VC job end up being disappointed with what they find on the other side of it. And I've written several posts about that. The one thing I would just repeat there, because I think it's very helpful, is like, how do you feel about saying no 99% of the time and seeing 90% of your companies fail? Like, I don't think people fully internalize, people from the outside world, outside of VC, internalize how negative the VC job is, like how much negative energy is embedded in that. So if you're not a person that really feels comfortable about all those no's and all those failures, I don't think you're going to enjoy this job, whether you get it or not. That's at least my take. Um, but then, like, how do you best position yourself? I would say, again, be in the deal flow. So, like, be able to tap into and show that you can really source amazing deals, because that's probably, honestly, I mean, I was a senior associate at a big firm, so I know why they hired me. They hired me because I could bring great deals to the table that they should look at, and like, sourcing is kind of one of the top things that people are looking at when they're thinking about hiring associates and analysts. Um, the second thing is, I would say, again, have an exit plan. VC is not a career path that is like banking, where you get in at the ground floor and you move up into, you know, the CEO seat. It's not like that. It's not built like that. So, like, go into VC with the right mindset of, maybe you'll find that amazing portfolio company 2 years from now that you'll jump into. And maybe you're going into VC to figure out how that company looks like, because you don't have a sort of wide enough arch. You're not looking at enough opportunities to figure out which one is the best one. You're not calibrated. VCs are really calibrated at what can work and what couldn't work. They don't know if it's actually going to work, but they know it has a higher probability of working. And that's the one you want to jump into as an employee, right? If you leave venture. So have an exit plan. um, and the third one would be have some sort of an angle, some subject matter expertise, some thesis that stands out, and then go and offer that. One thing that I did when I was at the Haas School of Business as an MBA student, um, you know, we have at Haas what's called Haas Venture Fellows, which is really a group of MBA students that engage with VC firms around helping them build a thesis, right? And that's what I did. I built a thesis around social media investing, um, infrastructure, more like developer tools and stuff like that. And then I went to 10 different venture firms and I tried to educate them about that and kind of learned and was cutting edge on that front. And as I told you, one of them was like, wow, we have a similar thesis. Yours is great. Can you come work for us? Like, I didn't actually have to convince them too much. They're like, no, this is interesting. You've done a really good job here. Come work with us. Obviously they interviewed me, all that, but it wasn't a push, push, push. It ended up being a pull because I had that expertise, right? So I think you need to figure that thing out. Like you have to find an area that's of interest where you're cutting edge and you can build a thesis, a narrative, something around that that would be interesting to the VC firm. Um, yeah, those are some of the things that I would do.
Yeah, and you have to say no, 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 no to so many founders, and that could like kill your soul in a way where you're like, hey, I kind of went into this because I want to support founders, and most juniors they don't get carry anyways. So it's like I just wanted to go into this so then I could support founders, but then you go into it and you're like, I'm saying no to like 99% of these founders. So should I like is this even good for my soul? But you have to
Yeah.
be really resilient, like Itamar, because he's doing this. Like he's probably looked at oh my gosh, like 20,000 startups, and he probably said no to like
Yes.
90,000 or something like that. So like just
Yeah.
imagine how hard that would be just to support founders, but go against that at the same time. And like Itamar says, you want to make sure that you have an exit plan. You want to make sure that you are the person for it. So how about a bit on the founder side? If you're a founder, what would be your 6 month plan to break into VC?
Oh, if you're an ex-founder, you already have operational experience. Then the first thing I would say is make sure that VC is for you. We've seen a lot of people move over to the founder side and then be kind of frustrated with VC because you're not hands-on, you're not running the show, you're really more in a mentorship, mentor, supporting role. So I think that being having strong founder DNA could actually be counterproductive to being a GP in a fund. So it's not for everybody. So figure out if it's for you, right? If you really want to shift your mindset from being an operator and building stuff and building team to being a lone wolf in a venture firm, supporting others without actually building stuff. That alone, in my mind, should win 50, if not 75% of founders that think that VC is a sexy job. For the people that do want to do it, you know, um, I, you know, I would say, uh, obviously, start doing angel investments. You've made some money, hopefully, by being a founder. Hopefully, you're successful, and try to start getting a knack of it. Like, are you, do you, are you picking well? Do you understand the basics, like how to calibrate around quality, diligence, right? Try to get a little bit of a feel for it because the other thing that we haven't talked about is that traditionally it has been fought, and I subscribe to that view mostly, that it takes around 10 years to train a VC. Uh, and the reason is because you're making all those early bets, and it really takes a lot of time for those bets to fully unfold and for you to understand what you did well and what you didn't do well, and then internalize all those insights and turn them into next set of investments in the next fund. So um, the earlier you start as an angel investor, the more experience you'll have, the more of a track record you build, the better position you would be to kind of figure out that this is your path in venture capital, right? Um, so start doing angel checks. Um, the last thing probably as a founder is like just try to maximize the value of your company, because the more successful you are as a founder, the more likely you are to land a VC job. So, like, you know, take your company public, and things are going to be increasingly so much easier for you if you want to bring into venture. Um, yeah, I mean, that's kind of an obvious piece, but obviously that moves the needle more than a lot of the other advice.
I honestly didn't realize like how long it takes to just like really train a VC at first. So you really like even if you're an ex-founder, you might, like Itamar says, you might not like it because you want to be more hands-on instead of hands-off and supporting. You like most founders wants to be like in the rough of things and they just want to do it, they want to lead the charge. But as a VC, you're really supporting. So you gotta know who you are, start early as angel checks. And then what happens after that is, if you got great traction, then bam, you can raise some funds from LPs and you would become a GP just like Inmar.
Yep, I think that summarizes it very well. Thank you, Joe. You're good at this stuff.
Yeah, that was amazing, Inmar. For anyone listening who wants to learn more about you or your firm, what is the best place to reach you?
Yeah. So if you're a founder and you want to raise capital, find somebody who knows me and have them warm intro you to me. That is by far the best way to get my attention. And it's not because I don't want to talk to you. I want to talk to everybody. I'd love to just brainstorm ideas and be supportive of every single entrepreneur out there in the world. Unfortunately, I only work 12 hours a day, which is not easy, but I want to do it, right? Which gives me a very limited, uh, I can only talk to so many companies, right? So the best way is through a warm intro. Possibly the second best way is to try to engage with me on LinkedIn and Twitter on my content. That's been increasingly working for folks. So put in a comment, ask a question, try to engage with me on social media, and I think that can sort of get my attention, but only to a certain degree. I still need somebody to kind of weigh in and say, "This guy, this girl, they're awesome. You got to talk to them." That's kind of the best way. And last thing is probably events. I do a few a year for sure, with speaking engagements, and I try to interact as much as I can with folks showing up. Not easy, but that's another way. Um, Again, going back full circle to the beginning, warm introductions. That's the best way of making it happen.
Yeah, and I'll drop his LinkedIn and Twitter in the description below. Out of everyone you know, who are two amazing VCs that you would recommend as future guests to our podcast?
Well, if you can get James Corrier from NFX, he's one of my favorite people in venture capital. He's just a brilliant, the VC, especially when it comes to the consumer. That's kind of a natural one. If you can get Sar Gore from CRV, he's another amazing one. I would say those are two people that I highly respect, that have helped me a lot, and would be great folks to interview. I'll add one more while I have you, and that would probably be Steve Vasello from Foundation Capital. He's one of the sharpest and most refreshing. Like he always comes up with like refreshing new ideas and thoughts about where the world is going to. So just a fascinating person to have a conversation with. Steve from Foundation Capital.
Yeah, thank you again, and thanks for everyone who's listening. Comment a question you want to hear from our next guest. If you enjoyed this episode, make sure to press the like button, subscribe, and share it with someone who's interested in getting into venture. We'll see you next time on Break into VC.
Thanks everybody. Bye bye. It's a pleasure being here.